What are we seeing right now?
Hi, Dan. Yeah, so we're seeing quite a bit of red play through the mainland markets as it returns from that lunch break. It could be because of some foreign outflows denting risk sentiment there. You've got the Shanghai Composite down almost 0.5%. But the CSI 300 real estate index, that's still up about 0.25%. And that could be because of this report that suggests that Chinese authorities are considering allowing lenders to provide short-term unsecured loans to property developers. The thinking behind this, according to this Bloomberg report, is that these short-term loans would help to facilitate day-to-day operations and free up capital for these builders to pay back debt. Now, the key thing to note here is in terms of the implementation, it says that it would require regulators to exempt banks from being accountable for bad loans, given the risks there. But the next question becomes, does that mean that the central government will be potentially helping out these banks in terms of stumping up that cash should there be bad loans? We know already that there is some caution from the financial sector in terms of lending to this sector, given the risks. And then, of course, this question about the spillover impact between the debt we're seeing in the property sector potentially flowing on into the financial sector. We heard, of course, that this major wealth management business, Zhongzhu, it's flagged insolvency overnight. And, of course, it has a major stake in Zongrong, which is that trust which we would have heard about a couple of months ago that had quite a lot of issues in terms of paying back loans and paying back debts in relation to multiple products. Now, what we do know about this trust is that a lot of its underlying assets relate to the property sector and loans in the property sector, Dan. So certainly one thing to keep an eye out going forward. Back to you.
Lynn, thanks for the update. Meanwhile, the Hang Seng is one of the biggest losers in Asia today. Emily Tan is live with us from Hong Kong. She's watching the markets there. Ems, what's unfolding right now across the equity trading landscape?
Dan, we got some drag coming through from the mainland property stocks. They've gained quite substantially in the days leading up to today. So a lot of give back there. We were at a one-week high on the back of the property rally following comments coming through from the Chinese government that Shenzhen is cutting its down payment for second home buyers. But today, you could see Country Garden shares down 6.7%, Longfor and KWG pulling back more than 2%. A number of these stocks on the 50, on the whitelist, where there's 50 companies that are eligible for funding from banks, as of course deemed eligible by the Chinese government. We're also watching stocks like Chow Tai Fook on the back of interim profits, 583 million, an increase of 36% on revenues of 6.3 billion. But look at the losses today here. Chow Tai Fook shares down more than 10%. The company is confident about same-store sales going into the second half. Mainland same-store sales in the first half up 6.7%. Its sister company, Newell Development, saying it's going to be buying back $600 million worth of bonds above market price, and this is in a bid to trim its debt load. Newell Development shares at 13.26. We're also looking to Cathay Pacific as they have an investor conference at 2:30. So in about an hour and 15 minutes from now, this is on the back of the company announcing its October passenger figures, 1.68 million for the last month. That was up fourfold year over year, 124,000 tons of cargo carried, and the strong performance is expected to continue into the second half. This as the goals, the metrics that have been set, 70% of pre-pandemic capacity and 80 destinations, all expected to be hit by the end of this year. Should also point out here that Cathay Pacific shares outperforming up 0.1% at $8.15. This, as the Hang Seng Index is an underperformer in the region, pulling back almost 1.5% at 17,664. That is the Hong Kong market today. Dan, it's back to you.
Ems, great stuff. Enjoy your weekend ahead. Thanks for joining us. Moving over to Japan now, and inflation there rose for the first time in 4 months, with core CPI up 2.9% in October, still sitting above the BOJ's 2% target for the 19th straight month. It comes while headline inflation grew 3.3% as well. Japanese equity markets reacted positively to the data. The Nikkei 225 and the dollar yen looking like this. 225 up by 0.6 at 33,641. Dollar yen currently buying 149.25. And over in the oil patch, Brent reversing losses in the Asian session as well. And hasn't this been an interesting story to track given the OPEC delay? WTI at 76.33, down 1% right now. Brent at 81.26, also down by 0.2. Let's unpack some of the market moves with Maurice Crevier. He's Group Chief Investment Officer, Wealth Management at Emirates NBD, joining us live from the UAE. Maurice, who better to talk us through some of the market ins and outs this week? And I think we can begin with the story unfolding right now. We're seeing this truce currently developing between Israel and Hamas, the hostage and prisoner swap expected to start soon. Maurice, do you believe that there will be a market impact here, or has this largely been priced in?
I mean, the market impact of this kind of events, and this one in particular, and in a way, sadly, as long as it is contained to a region, it doesn't have that much of a global market impact. What we can see is the fact that the kind of geopolitical premium that we had seen in oil prices is continuing to go down, also because of this delay in the OPEC meeting. I would say that basically we all hope for peace and the end of the violence when it comes to market impact. I wouldn't say that it's obvious because, again, geopolitical premium, less in oil, but you can still see that gold is in high demand. So I don't think the market impact will be huge in any way.
Walk me through what we can expect from this OPEC meeting, though. I think this is really where the geoeconomic risk premium has been playing out over the last couple of weeks. No real supply impact as a result of the war, but the headlines around OPEC have certainly been moving the oil markets. We're going to see OPEC meet on November 30 now. Maurice, do you think oil has fallen far enough to prompt some kind of producer response here, or will we just see perhaps just